First item is a Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Need a motion to adopt the agenda.
So moved.
Support.
All those in favor, please vote on your iPad. Thank you. Items adopted. Approval of the minutes from August 20th, 2015. Someone's got a good memory. Moved by Commissioner Gillette, supported by Commissioner Tocco. Any discussion? All those, please vote on your iPad in the affirmative or the negative. Okay. Public participation. Anyone from the public wish to be heard? Anybody from the public wish to be heard to address the audit committee? Anybody from the public? Seeing none, we'll close that. Item 6 is a presentation from the 2016 annual financial report. Steve Smigiel, you can lead us off, please. Thank you. Good afternoon.
So what you have before you today is our annual report, our comprehensive annual financial report, which is essentially the result of our audit. We have representatives here from Plante Moran that have a little presentation for you today. I am pleased to announce once again, as in all prior years, that we received an unmodified opinion, which is the highest level of assurance that you can receive from an independent auditing firm. The audit went without a hitch, very smooth. It's a very intensive process. The auditors have about 6 or 7 folks on site every day of the week, pretty much for about 2 or 2.5 months. Takes a lot of time. And I specifically want to give kudos to my Deputy Director, Steve Adair. He was very instrumental, took basically the audit process away from me after his first year. He's been on board about 1.5 years. So he coordinated the entire audit, put the entire statements together. So I want to pass along kudos to him. He's very instrumental in the operations of the department, as well as my whole staff. You'll hear me again in my budget hearing. I have an incredibly talented staff that makes my life a lot easier. So with that, I will turn it over probably to Dave Harrington, who's our engagement partner from Plante Moran, for his presentation. And if you have any questions after that, Dave or I should be able to answer those.
Thank you, Steve. I am Dave Harrington, audit partner at Plante Moran. We're here with Ali Hijazi, and we will be presenting your 12/31/16 audit results. As Steve has mentioned, you got the best opinion you can get from your auditor, which is an unmodified opinion. Seeing as this is a new commission that we're presenting to, we're going to start off with a kind of a summary of what you hire us actually to do, what an audit is, and some of the required communications that we're supposed to have with you. So we think that makes a ton of sense. As we're going through the presentation, if you have a question at any time, feel free to jump in. A lot of times having it at the time of the presentation makes it more pertinent. And then obviously we'd be happy to take any questions on the end concerning audit or any of the letters that we put together. And so with that, I've handed off the good news that you got the best opinion you can get. It is a 214-page audit, so in lieu of going through 214 pages, we do have a slide presentation in front of you and up on the screens. Ali?
Good afternoon. So as Dave mentioned, we did try to capture the pertinent points from the audit in the slide presentation you should each have in front of you. We'll walk through kind of the audit plan, what is required of us, the results of the audit, and then we'll wrap up with a few kind of financial highlights from 2016. So there's really, we have really 3 deliverables. When you hire us, we provide, most importantly, the opinion on the financial statements, which is what Steve talked about, the unmodified opinion. It's 3 pages out of those 214 pages that Dave mentioned. That's really what Plante Moran offers. It's the highest level of assurance that you can get this year, which is what you're looking for and what you hire us to provide. We also have 2 other letters that we issue. One of those is all of our required communications, things that the audit standards require us to communicate to you as a board. And then in addition to that, we issue a report on internal control. So as we go through the process of the audit, if we identify any issues around the internal controls in place to produce the financial statements, we're required to communicate those. So we've kind of taken all the pertinent information out of those deliverables and captured them here in this slide presentation. So you may remember back in probably the early part of 2017, every year we issue what's called a pre-audit communication. So we summarize for you our audit plan. We circulate that to the entire board, and it offers you an opportunity to take a look at what we've identified to be the significant risks of misstatement of the financial statements, and it also affords each board member and audit committee member an opportunity to weigh in with what you see as the risks. We also are required as part of our plan to meet with members of management and of the board to have a discussion around what happened during the year, what's new or unusual, to make sure we're factoring that into our audit plan. So our audit plan is tailored very specifically to things that are going on at the county, and it varies every year as those risks change. This slide captures some of the more significant financial risks in terms of making sure the accounting is right. So obviously there's significant cash and investments that the county is responsible for, so taking a close look at those is always a big part of the audit. There's also many departments. Although the county as a whole is a December 31st year end, some departments are on different year ends, grant departments, et cetera. And so just making sure all of the departmental activity is captured properly, because that can get a little tricky. And then in the last couple of years, we've had this, the accounting for the Intermediate Retiree Medical Benefits Trust. That's a very unique and significant transaction for the county. So we are making sure that that's all accounted for properly, disclosed accurately in the financial statements. Those are some of the risks that we would have identified on the front end of the audit. So our responsibility, so the standards actually, all they require us to do is to express that opinion that you look for on the financial statements. Have the numbers and disclosures been prepared in accordance with generally accepted accounting principles? And we perform our procedures to obtain a reasonable basis to support our opinion. You may be familiar with the concept of materiality. Obviously, with an organization this large, it wouldn't be feasible to look at every single transaction. So we use a sampling methodology. We'll look at significant transactions, and then those that are more difficult to account for, to make sure that areas where things can go wrong is where we're spending most of our time. As Steve mentioned, we're actually on site every day for about 2.5 months, but really this process begins, I'd say probably in October. We actually spend some time on site in the fall with some of your September 30 year-end departments. So this entire process from very beginning to very end is probably a 7 or 8 month process that we're working with the county. This year, there were a couple new accounting pronouncements that added a few pages to your financial statements. It didn't change how anything was accounted for, but it resulted in some new footnote disclosures regarding tax abatements that the agreements that the county is involved in, as well as some additional details around the investments that the county is responsible for. One of the other required communications we're to make is that within the financial statements, there are certain numbers that are significant estimates. So if you think of the county's net pension liability or retiree health care liabilities, so the county engages actuaries to come up with estimates for what those liabilities are projected to be. So those would be two examples, and that impacts the accounting. So one of the things that we're required to perform as part of our audit and then communicate to you is that we looked at those assumptions that are used in those calculations and made sure that they were reasonable in relation to the financial statements as a whole. Additionally, if had there been any significant difficulties in completing our audit or disagreements with management about how to account for a particular transaction, we'd have to bring that to your attention. We're required to. And as Steve mentioned, it was a very good process this year. We don't have any significant difficulties or disagreements that we're required to report to you, and so we're pleased to report that. There is a section in one of the letters that talks about other additional information that may be helpful to you. We won't go through those in detail. I'll just, they're really more around things that are legislatively could impact the county coming up in the future, and is really designed to add more value to you as a board. One of the items that will be coming down the pike in the next couple of years that will be significant is the entire accounting for retiree healthcare will be changing pretty significantly. So we are already in the process of working with management and our other clients around what they need to do from now in order to be prepared to make this change within the next couple of years. So that's an item that's significant. It'll change how your retiree healthcare liability is recorded on the balance sheet, and there'll be more information coming to you as we get more into that process. So as I mentioned, we do have a letter called the Report on Internal Control. This is the letter where if we identify any issues in the internal controls, we're required to bring that to your opinion. And really, if we identify an internal control deficiency, there are two different levels of items that we may be required to report to you. The most significant issue is what was referred to as a material weakness, where potentially there was an issue in the controls that could result in a material misstatement, if not corrected. And then something less severe, which is called a significant deficiency. So this year we had one material weakness and one significant deficiency. As more and more transactions are processed electronically, we have taken a closer and closer look at wire transfers and ACH transactions that are performed to take a look at the controls around that. And as part of our audit, we did notice in one of the accounts at the Department of Public Works, there was a bank account that did not require that dual authorizations. Two separate people were required to initiate and release a wire. As a result of that, we actually looked at wire transfers that were initiated throughout the year, and we didn't find anything that wasn't improper, unsupported. It was just that capability existed for a part of the year. So because that capability existed, we're required to report that to you. We did discuss that with management at Department of Public Works, and they have already remediated that. So that has already been addressed. But because it came up as part of our audit, we're required to communicate that to you. The second item, the significant deficiency, really this is, there were a handful of individually pretty insignificant items that we identified just as part of going through the audit that collectively we thought merited your attention. And really these are items such as, if we go to look at an account reconciliation and have to make particular adjustments, not big dollars, but they're required regardless, that would be the sort of item that is included in here. A couple instances of just insignificant bank accounts of different departments that weren't recorded on the general ledger. We've sat down with management, communicated these issues, and I know that management's looking into them. But again, because they came up as part of our audit, we are required to communicate those to you. So that portion of the presentation covers the required communications. Of course, we're happy to take any questions on that. The next few slides will focus on the general fund, the county's general fund, which is the primary operating fund for the county. So this slide shows for the last 4 fiscal years, general fund revenue by major category. In 2016, the general fund had about $221 million of revenue. About $114 million of that was from property taxes, which is obviously the largest revenue source for the county's general fund. Overall, general fund revenue was down by about $9 million, and primarily that was driven by transfers from other funds. So if you'll remember, in 2015, the delinquent tax revolving fund transferred $30 million into the general fund. That $30 million transfer did not recur. This year was only an $8 million transfer from the delinquent tax revolving fund into the general fund. That's primarily what's driving the decrease. Some of the other increases in some of the other categories are the county did have more federal and state grant revenue that was received into the general fund, about $8 million worth. And then other different revenue types such as building rentals or fees from dispatching services, or interfund allocations also increased. That other category went from $10 million to $21 million. On the other side, so general fund expenditures, this is for the same period, 4 fiscal years. The general fund had total expenditures this year of a little under $232 million. And when you take a look, which is about $12 million less than in 2015. So if you look at this slide, the largest difference, again, is in that transfers line. So in 2015, there was about $82 million in transfers to other funds versus $63 million in transfers in 2016. And part of that is, in the prior year, there was a $45 million transfer from the general fund into the IRMBT. So again, a non-recurring item that was in 2015. And then in 2016, transfers of $63 million, about $30 million of that was for capital projects. And so when you look at these two slides, you see a lot of the variability results in, it comes from the transfers line. So we do have, the next slide talks about or shows the history of transfers, because we think it's important to explain kind of where that variability has come from. So this slide shows the last 10 years of general fund transfers out to other funds. The blue portion of these bars are the, I'll say, operating transfers. So these are transfers to other funds for operating type expenses. The orange part of the bars is the capital transfers. Now, for purposes of this slide, we've excluded that $45 million transfer to the IRMBT in 2015, because it's not capital, and it's not really operating either. It was kind of a one-time thing. So you can see for the last 5 years, that operating transfers, that blue portion of the bar, has stayed within a band of about $25 to $30 million. Those are kind of your recurring transfers, and those would be transfers, for example, from the general fund to certain grant funds to pay for the county's match on certain grants, or transfers to like community mental health, things that are recurring every year. You may also notice that blue bar decreased significantly from 2011 to 2012. And so the history there is, in 2012, there was a new accounting standard that was issued, and basically certain funds that used to be reported separately and would be funded with transfers from the general fund were no longer separately reported. They got rolled into the general fund. So those transfers kind of went down, because all that activity began getting reported in the general fund. So what does all the revenue and expense talk, kind of where does that leave you? So this slide shows a history of the general fund's fund balance as a percentage of expenditures. So general fund at the end of 2016 came in, I believe, just under $62 million. And so $62 million of fund balance, that represents about 36% of general fund expenditures. A lot of times we'll get a question of what's the right percentage. There really isn't a correct percentage of fund balance to have as a percentage of expenditures. Really, it depends on things such as, what are your plans? So if there's large capital expenditures coming down the pike, having a certain level of general fund balance to address that might be appropriate, or it may not, depending on what your plans are. What a healthy fund balance allows you to do is kind of make strategic decisions to address the needs of the county, whatever they may be. Do you have a question? Sure.
I just want to catch it while we're talking about the general fund balance, because this is a number that's, I mean, probably for different reasons in accounting in different parts is different all over the board. And I'm looking at financial highlights of this, and it talks about the unassigned, which might make big difference. Unassigned fund balance was $43 million, or 18.2% of general fund expenditures. And then here it's 36.4. So I don't understand, and I'm not an accountant, and I'm sure that there's an explanation for it, but that would be something that would be very helpful to understand. And then, I mean, then there's our proposed budget that shows 2016 as 26.6% from finance. And I mean, I'm sure there's an explanation, but I can't figure it out. Not that I'm supposed to, I guess, but.
Sure. I'm going to take a educated guess here.
Sure.
That these percentages are based on expenditures only and not transfers. So when we talk about 26%.
26% in the proposed
Right,
budget,
so
right?
that represents the general fund, the fund balance is a percentage of expenditures, which are day-to-day operations, plus the transfers out to the grant funds and the capital improvement fund. The slide presented here only includes expenditures. So it's a counting.
Okay, but there's one more. And then it's in your financial highlights, it has 18.2%, and I'm guessing that there's another variable that goes along with it, but I'd just like to know what that is.
So that would be the unassigned. So we
Yeah.
also have categories of fund balance. So you have the assigned, which is basically for the next year's budget. You also have non-spendable and you have unassigned. So the total of those is 26. The unassigned is 18.
So
Makes perfect sense.
if I'm not an accountant, you might say, well, what number should I use? I think that's a reasonable question.
Yeah.
It crossed my mind as I was listening to these folks talk. So the 43 million, which is the unassigned, that's a money available at your discretion. That's the dollar number, and it's like, okay, divided by what is our budgeted expenditures and operating expenditures that we transfer to other funds, which is that 18%. So if you're strategically planning going forward, you should be thinking about the 43 and the 18 versus, this is the total numbers, which look a lot better. And that's where, welcome to how everybody can be confused. Oh, we got lots of money, let's go do this, or why are we doing this, why are we doing that? The reality is it's 43, 18, but more importantly than that number is projecting out if things stay the same for the next 3 years, where we're that 43B, we're that 18B. So if the trend has it going up, that's great news. If the trend has it going down, then there's strategy that has to be involved. So this slide doesn't show the projected 17, 18, and 19, but as you're looking at your budget for this year, which I'm well aware of, we're in the knee deep of, it's very important to not just consider the 12, 31, 16 numbers. It's the what the term in the audit is called unassigned. That would be the money that's not already dedicated for another purpose, which is $43 million at 12/31/16, and which is 18% of your total costs of 2017. So apologize for the confusion. A good thought for next year, because really in your policy situation, you need to know the numbers you need to work with, and that's the number you need to work with.
So the 18.2% / 43 million for the end of 2016 is kind of the correct number that we should be working with budget-wise.
For budget purposes, that is the number you should be working with.
Okay, all right, thank you. That makes more sense.
Yeah.
I'm not sure. it makes-
Went around the block on that. So.
All right, thank you.
So
That's it.
that was the conclusion of our presentation. So if there's any other questions that came up, we'll be happy to take those at this time.
Yes.
Commissioner Gillette.
Commissioner Leanne Gillette.
Thank you, Chairman Don Brown.
Donald Seaver.
I'm probably looking at this very simplistically, but on page 6, you've got the general fund revenue years ended December 31st for the last 13 through 16, and then the next page you've got the general fund expenditures. And if you just looked at these two pages and you didn't know much else about public finance, it would look like we spent more in 2016 than we in 2015 and 2016 than we took in general fund. Is it that easy to explain that we spent more than we took in? And how did we make up for that gap?
I'll take that. I'll take that one, and Steve can correct me when I. So, a couple things, and that's why we show a number of years. For a number of years, we had more revenue coming in than expenditures, which we were aware of, and we built a stronger fund balance, which allowed for some strategic decisions made by this board, which included capital and the retiree trust. So we made a conscious, I'm going to say business decision, to spend more than we actually took in 15 and 16, because we had built a reserve that allowed us to do that, to address some of these long-term issues that were existing at the county. So can you do that forever? Absolutely not. Were we able to do that the last 2 years? Absolutely, because we had put ourselves in a position at the end of 14 to have a strong enough fund balance to help cover those excess expenses the next 2 years. So we used fund balance, but it was fund balance that we had, not fund balance we hoped for.
Gotcha. Thank you. Oh, one other question, if I may, Mr. Chairman. Just the question is, has your firm been doing our audit for a number of years?
5 years.
5 years? And the one of the material weakness in the public, I'm trying to find that page, but there was it was a concern about the wire transfers in the Public Works Department. Had that appeared in previous audits in any way?
Yeah, that's a great question, and in fact, it had not. So each year, we as you look at wire transfers, the use of wire transfers, the activity within a bank account. So technology's changed so much in the last 5 years, and the audit requirements around wire transfers have changed exponentially in the last 5 years. So while in the control process, you have excellent detective controls where you can catch it if it's the wrong wire. We increased observation, and we spent a lot of time in the larger transfer areas. This year, looking at that particular account, we noticed, and sometimes when you have turnover or you have other things happening and new banks, an account pops up, a new account pops up, and here's an account where there's we don't have the dual.
Right.
We have the single, and then the detective after it's done. So we looked at it and said, a best practice, particularly with the volume of dollars we're talking about for Public Works, is dual prior to.
Okay, so I still don't understand whether or not this has this lack of dual oversight. Is it only occurred in this year's audit, or did it not occur before but you checked for it, or is it something you hadn't checked for before because things have changed, or it's a random process?
First time for that account we had checked for it, and once we saw it, obviously as Ollie mentioned, we tested every transaction.
Okay.
And then we because we're auditors, we made sure now what changed. Okay, authorizations changed. Oh wait, you didn't get a dual authorization on this one. And as soon as we brought it to the new Public Work Commissioner's attention in that department, they changed it probably the next minute.
I wonder if it's possible to go back and audit that for previous years where that lack of dual oversight may have been occurring.
We can always look, absolutely. I'm not sure if it occurred for that account or if that account even existed without going into the detail.
Yeah, I'd be curious to know. Thank you very much.
But I will say this, because you do have detective controls, so what that means is you have controls so something can't be done, then you have controls to verify nothing inappropriate got done. There are detective controls on that account, so if something in previous years had been done inappropriately, it would have been caught. That's the best way of saying it.
So somebody's reviewing the activity after the fact to say, does all this activity make sense? But because when you're dealing with cash, once the cash has gone out the door, that's an area where you really have to have preventative controls. Detective controls is not good enough.
And so, again, this year, we said, wait a second, it's not worth taking the risk. Let's make sure the preventive is stronger.
Yeah.
Because your detective was actually excellent. And so if something inappropriate would have occurred again, it would have been caught by Treasury or accounting or within the Public Works Department.
Okay, I just wonder if it's not worth double checking on that particular department given their past.
Steve and double check.
Thank you.
You bet.
I think some other agencies are checking, Commissioner Gillette. Commissioner Duje.
Thank you, Mr. Chairman. Interesting. You actually answered a number of my questions as far as the revenue versus expenditures. Question, how many people are involved in your audit?
People at the county or people from our?
People from Plante Moran.
It's at least, I'd probably say it's 12 to 15 when you consider all the staff, managers, technical resources, all that.
Okay.
And the federal programs.
Yep, and for the federal programs audit and all that.
Okay, so that's quite a number of people. How do you pick the departments that you're going to scrutinize? Or are you?
So part of our approach is what is going on at the county. So as Dave mentioned, if there's turnover in a particular department, we know that there's more risk. Did all the authorizations change? Did people's access who are no longer there get turned off? Those sorts of things. So part of it is very intentional and risk-based, and then there's an element of it that's sampling-based. And so where we are doing kind of random sampling that's influenced based on the significance of the activity. So the way it's designed is if you have a department that has a lot of activity that's significant activity that's going through there all the time, it'll consistently come up in our testing. For example, Department of Roads is always a big part of our testing. Whereas other areas that if there's, minimal activity will still come up, it'll just come up less frequently.
Okay, because I see that you want to be on the hook for the next 5 years. And although I admire you for your bravery, I don't know what is going to happen for this year. Just where are you going to categorize the sinkhole business?
Yes, so again,
Is that Public Works, or is it Treasures, is it what?
that is Public Works.
So that'll be strictly Public Works and that's it?
There's, assuming all the activity and the expenses associated with it are public, right now, all I know, from everything I can read and tell, it's Public Works.
Okay,
Absolutely, and so obviously there's big bond issues, so there'll be liabilities.
that's what I'm getting to, that this is going to be a rather unique year for your profession.
Your county has provided unique years a few times.
Well, that's good to hear.
Well, I shouldn't say my county.
Okay.
And
How
Ollie's-
about our county?
Our county, and my mom lives in Fraser, so I hear it in both ears, so, pretty clear.
Okay, very good. Thank you, Mr. Chairman.
Thank you, Commissioner Dujay. Commissioner Leonetti.
Thank you, Mr. Chairman. This question is for you, Mr. Hijazi. I'm going to go back to your report. You indicated that there were some significant, the term was significant deficiencies that you found. Is that correct? I wasn't clear in your presentation. Was it one significant deficiencies or were there several significant deficiencies?
It's one significant deficiency so if you have kind of one control issue that just pops up in a couple of different areas, you may identify it 3 or 4 times, but it's really the same internal control. So it's one significant deficiency. It's just multiple immaterial items that related to that.
Okay, and I don't recall from your report, which department was that in? Do you know?
It was a variety. So you had, there was a bank account in the Register of Deeds that we had an issue. There was a bank account in maybe the County of Comet, which is funds that are held in a fiduciary capacity. Those are a couple that I can think of.
Comet is police task force, isn't it?
Right.
Yeah, but it's a
Usually.
fiduciary fund in the county.
Okay.
So, and that's 2 of them. I'd have to go into the details to identify others. Can you think of any others, Dave?
Yeah, a lot of times the drug forfeiture account might not be on the books, and we understand why. But it's technically supposed to be, but we totally understand why because of the confidentiality. And then I think there was an account which was in the old clerk's department, which it wasn't material, but when we said, well, here's like 3 accounts that our finance department doesn't get regular information on, let's bring that to everybody's attention, and so that we stay closer to it. None of them were material, but definitely worth communicating. That's what you hire us to do, is to let you know, and that's what we were doing.
Okay. What about remedial steps? I take it the department heads were notified about these significant deficiencies? Were there any remedial steps done about them?
Yeah, yes. So I just checked with Steve. So Steve Adair has had conversation about stepping that up and making sure the communication has been improved in that. And I would say these are minor in comparison. I think the commissioner asked how many people we have, how many months. We do a lot of checking. This is a huge community, huge audit, and these aren't the items that we found are a very small amount in comparison to the size of the community. Now, it is our 5th year auditing, and each year we've found some things, and the finance director, Steve Smigiel, has always made sure they get addressed. So the responsiveness of the community is one of the reasons we want to be back on out here, be part of the solution for the next 5 years, and continue serving the community and the county, because you guys respond well. And so even though we're required to report it, we reported it. That's what we're hired to do. There's other counties we do that have a lot more. That list is pages. So just as an observation.
One last question, and you're not required to answer it. It goes with the whole idea, tacking off of Commissioner Drollett's question, that we're spending more than we're bringing in, and we made a strategic decision several years ago based on two things: the retiree plan and capital expenditures. And I think your answer was that we can't continue to do that forever, but we have some funds available to do that. You don't have to answer this question because you're not required to, but can you give us maybe Mr. Smigiel could answer this. How long can we keep doing that?
I would refer you back to that forecast I did. I mean, we get to fund balances that are in that 15% range in a year or two, and then we gradually start getting out of that position as our debt service, payments start to drop off in 2022 and 23. So we really need to concentrate on that 15% level. I mean, 20 is optimal in my opinion, but 15 to 20 is acceptable.
Okay.
We don't want to stay in that 15% range very long.
And let me just ask you this, and again, I don't want to harp on something that was brought up earlier in the week, but is this why we may be looking at a $20 million bond issue? I don't want to keep bringing that up because it was just something that we talked about a couple meetings ago. But is that a reason why?
In a sense, yes, because if we have all these capital needs, we keep talking about all the capital needs. If we were to finance all those capital needs and do all the projects on that 5-year plan with cash or fund balance, that would drive the fund balance dangerously low. It would drive it below the 15, probably closer to 10.
Okay. All right. Thank you. Thank you for answering my questions. Thank you, Mr. Chairman.
Thank you, Mr. Chair. Just to follow up something that Commissioner Leonetti asked about, and I may have missed it, but it's in regard to the asset forfeiture fund. You said that it was obvious why that wasn't reported in some detail, but it's not obvious to me for some reason. What is the obvious reason?
So a lot of times, a lot of communities, because it's used for drug informant money, and so the confidentiality of the expenditures is extremely important. A lot of times undercover type situations. So the more hands that touch it, the higher the risk of exposure. So you have to be very careful.
Okay, I guess it would be a question then for our sheriff, because I would imagine that money would just go into our enforcement, and I don't know why it would be a secret that it came from a particular fund but
again, it's not large volume, but $100 might mean a lot in a case that they want the discretion to be able to do it without, it's not lots of times you have to use cash in these police matters versus your normal controls. And so it's an operating decision made at the department level, and not being public safety officer, I have to respect it. And then what we try to do is put in as good of controls as we can, understanding the complexity of what they're required to try to pull off.
It's more about how they utilize it, the process of utilizing the money as opposed to knowing how much is there and that
Right.
sort of thing. Okay.
Yeah.
Okay, that makes sense. Thank you very much.
You bet.
Any other speakers? I don't have anyone on the list. Does anyone else have any more comments? I need a motion to receive and file the report. Motion by Commissioner Carabelli, supported by Commissioner Sauger. Please vote. Thank you very much. Thank you very much.
Appreciate it.
Commissioner Leonetti, please vote.
Oh, I'm sorry. I was thinking of his next question.
Okay, item 7A, Commissioner Kraft.
Mr. Chair, I'd like to make a motion that we move this agenda item and add it to an audit committee meeting before the government operations meeting on September 11th at 3 p.m.
Discussion on that?
I'm sorry, who supported?
Commissioner Kraft.
Thank you, Mr. Chair. As a lot of you know, I'm a new commissioner here, and thank you for your presentation. You guys did an excellent job. I'm looking over everything now, and I think I would just be doing my constituents a disservice if I didn't take a look at both. I know that there were two firms that came forward and presented information, and I would just like to hear from both of you and learn a little bit more about each service, and because there is a difference in dollar amount, and like I said, I just think I would be doing my constituents a disservice if I didn't bring you both to the table and be able to ask you questions. Thank you, Mr. Chair.
Motion's been made and supported. Please vote for tabling this to the date specified in the motion. Okay. Motion passes at 10-1. So we'll address this in a few weeks. Item number 8 is new business. Any new business for the committee? Any new business? Seeing none, we'll close new business. Item number 9 is public participation. Anyone wants to address the audit committee? Anyone from the public wish to address the audit committee? One more time. Anyone else want to address the audit committee? Seeing none, we'll close public participation. Motion to adjourn. Motion by Tuesday, supported by Commissioner Gillette.
Hey, Don.
Yes, sir.
15 minutes.
I'm going to postpone for 15 minutes before the start of the next meeting. Please be advised. Please vote to adjourn. Thank you. See you at 15 minutes.
You already voted.